Hi everybody, this is Sean Overton with OneStepRemove.com, and in this video we're discussing the strategy right here on the screen. You'll notice it looks awesome. It's got a beautiful equity curve, and it's over a 6-week period, it's returning 8%. It looks phenomenal. And when you go on the chart here, and go ahead and zoom out, you can see that it makes some beautiful trades. It does have some losers. However, it has some monsters. Here it's catching this huge short. Here it's catching another huge short. And that's the reason that it has all these big bangs in the equity curve. Here's the thing though. This isn't a real strategy. It's purely random. There's nothing to this. It's just random numbers. And to convince you of that, I'll show you the source code. And you can see here in the beginning, I'm just loading a bunch of random numbers from a file. And then in the middle of the strategy, every time a bar comes in, I give it a 1% chance of exiting. And then as soon as we've exited, we have to randomly choose whether to go long or short again. So in this beautiful, awesome equity curve, there's nothing behind it. Nothing at all. It's purely random. And the reason for this video isn't to make you feel silly or get excited about an awesome trading strategy. It's to hopefully teach you that random outcomes really do exist. And just because you see an awesome equity curve in your backtest doesn't mean that this strategy is a good idea to trade in real life. Let me show you what happens if you follow something that's purely random. I'm going to run a test over the exact same period, but what you're going to see is that the equity curves go from being awesome to being mediocre most of the time, and some of them look truly awful. So we'll start running some back test, and there's an awful one right off the bat. And then you're going to notice a lot of them just kind of float up and down. But if you average them out, they would actually average to 0. But I'm just going to click here for about 30-45 seconds so you can see a number of different possibilities and just how wildly divergent it could get. Here you get a 10.5% return, purely random. And here you get a hideous return of about -4%. And these are a little more typical where you get the roller coaster rides, but eventually it winds up back somewhere near 0. So the conclusion, you can't use the equity curve to just make your decision about whether a trading strategy is good or not. You got to go on with something a lot more specific. We're going to get into more detail as we go through the series. If you have any questions on this, you can find me at www.onestepremove.com. My name is Sean Overton. Thank you for listening.